Quickie Forex, quick tips and tricks to improve your Forex trading and make you more money. Right, this video is all about how to determine a precise pullback point before entering a trade. A pullback point is an area where you can wait for the price to move to in order to get a better entry than the one that you might have picked before. The best way to illustrate this is through an example. Now, let's assume that I got a signal to sell this euro. This is a 5-minute chart. Let's assume I got a signal to sell once we'd moved down through this area here into this zone. I would like to be able to get into this trade with as small a stop loss as possible. And so if I placed my cursor over there and if I got the sell signal at, let's say, 42.10, I'd have to have my stop loss above 42.50 to keep it above this high point. That's the system that I use. It doesn't matter what system you use, you could be using a different type of system. But what I'd like to do, instead of getting in at 42.10, I'd like to be able to get in at a better price, a higher price. Once I've got the signal, I want to wait for a retracement, in other words, a move up against my short selling position so that I can get a better price to move down. One very simple way to do this, and it will pinpoint your entry point very, very accurately almost every time. It's something that will take you 30 seconds to draw, and it's a simple trend line. And what I'm going to do is just put a trend line in like this over here, and this illustrates where the price has been moving along. We break through this trend line, and this might be a different signal. In fact, this would have been a signal given by a moving average crossover, which I'm going to illustrate to you quickly now. I'm just going to really put it on here. I'm going to put a 10-period moving average, 10-period exponential moving average, and I'm going to put on here another moving average just to show you the way you could have got this signal. And let's put a 21-period moving average, exponential. I'm not sure what this will produce in terms of a signal. And there you go. In fact, what I'm going to do is change that. Sorry, that I'm just really doing this at random, but let's move that other moving average out from 21 to, let's say, 54. And this is actually one of the numbers that I often use. And you can see there that if I just zoom in a little bit, you can see there that the 10-period moving average has crossed the 54-period moving average at around about here. That might have given you your signal to sell. Just as an example, let me speak properly for once. And your signal system might be completely different. It might be a MACD, it might be an RSI, it could be any sort of indicator. But when you do get a signal and you get an entry over here, always wait for a pullback. And the pullback is often to the underside of the trend line. Now you can see this trend line I've drawn very simply. I've just drawn it in there. It takes me 2 seconds. I can remove it, just show you how quick it is to draw. I just find a low point, find the high point that joins up more or less where my signal has taken place, and then I wait for a retracement to the underside of this trend line. Now remember, this trend line has acted as support while the price has been moving higher. Then the price broke beneath it, and that very same trend line, which was support, now acts as resistance, and I'm able to wait for the price to get up there. I can see actually there's a very nice tweezer top candle formation coincidentally which occurs at the same price, and that would be my entry price. I can get into this trade at around 42.35 instead of 42.10. That gives me a 25 pip advantage. That means my stop loss needs to only be about 20 pips instead of 45 pips, and it also means when the price goes down I make much more profit because I'm moving from a high place down to a low place instead of moving from the sort of intermediate price down to a low place. And I also don't have to endure the retracement against my position that often happens. Now I'm going to give you one more example that I've actually pre-drawn in here already for you, and let's hope it's still here. Yes, it is. And I'm going to have to zoom in just a little bit, and once again I'm assuming that this, and really it's quite coincidental that this 10-period moving average crossing over the 54-period moving average would give me an entry signal around about here. I'll draw a horizontal line in just to give you an illustration. Around about 42.15. I would have also considered the break above this horizontal support line as an important sort of level as well. 42.15. Now what I've done is I've drawn a trend line in. You can see this trend line here, and again it's very quick. Let me just remove it for you for illustration's sake, and I can just draw that trend line in right there, and you can see that trend line is touching all these points. Once I get the entry signal, I can wait for a retracement back down to the trend line. I can get into this trade at around 42.05 instead of 42.15. That saves me 10 pips on my risk and makes me 10 more pips on my profit. You can actually see at a later stage the price retraced once again back down to the same trend line where it again acted as support. These trend lines, after you've got a trade signal of whatever sort you might be trading, these trend lines act as very reliable entries for the pullback that enables you to reduce your risk and increase your profits, and that's what we want with Quickie Forex.